Hello and welcome to the latest episode of Legal Bites, the official podcast of Cummings and Cummings Law, where we focus on helping businesses and their owners re-domesticate out of volatile legal and tax environments like Mississippi to predictable pro-entrepreneurship, pro-growth states. Today, we are discussing how to move your existing LLC or corporation out of Mississippi to a new state to avail yourself of tax benefits, among other advantages. But first, a brief introduction. My name is Chad Cummings, and I am an attorney and certified public accountant serving clients in matters of business, tax, and commercial law. I am Chief Executive Officer of the multi-state, multi-attorney law firm Cummings and Cummings Law. And in addition to my day job, I also teach business and tax law at the university level. I hold 4 degrees, including 2 law degrees, as well as a bachelor's degree in accounting and a master's degree in taxation, in addition to 11 professional licenses and certifications covering accounting, tax, audit, and of course, the law. My firm website is www.cummings.law. Mississippi ranks as number 27 on the Tax Foundation's most recent state tax competitiveness index. That is not outstanding. It is not terrible. It is firmly in the mediocre category. The state has enacted some real reforms in the last few years. It moved from a graduated individual income tax to a flat rate, reduced that rate to 4%, enacted permanent full expensing for machinery and equipment investments, making it only the second state in the country to do so after Oklahoma, and scheduled its capital stock tax for elimination by 2028. Mississippi does not impose a state level estate or inheritance tax. State and local tax collections per capita are $4,767, among the lowest in the nation. On paper, Mississippi is doing some of the right things. The issues that remain, however, are not trivial. Mississippi's corporate income tax is still graduated with rates of 4% on income up to $5,000 and 5% on income above $10,000. The legislature moved the individual income tax system to a flat rate, but left the corporate tax system graduated. The state imposes a so-called throwback rule on corporate income, which is very unfavorable for small and medium-sized businesses, meaning that if a Mississippi domiciled corporation earns revenue from sales in a state that does not tax that income, Mississippi taxes it. The throwback rule penalizes multi-state businesses and rewards them for leaving Mississippi. Mississippi's state sales tax rate is 7%, among the highest in the country. Low reliance on local sales taxes keeps the combined rate moderate, but 7% at the state base level is still a direct cost on every consumer transaction. The number that defines Mississippi's fiscal future is 57%. That is the funded ratio of the state's public pension plans. It is abysmal and is a flashing red light for anyone paying attention. That means that for every dollar Mississippi owes in future public pension obligations, it has only 57 cents in its pocket. That gap is among the worst in the United States, worse than Michigan, worse than Maryland, worse than Colorado, and comparable to Kentucky. Unfunded pension liabilities are obligations that do not simply disappear. They do not shrink with time. They grow. The money to close that substantial gap must come from future revenue, and future revenue comes from future taxes. Mississippi's rate reductions were funded by favorable fiscal conditions over the last few years. And if those conditions change, if revenue growth slows, if the pension gap widens, the legislature faces an unenviable choice between cutting services, which it is unlikely to do, and raising taxes, which it is very likely to do. The 57% funded ratio makes that choice more likely and more pressing with each passing year. State and local tax debt per capita is $4,985. The gas tax is 21.4 cents per gallon, among the lowest in the country. There is a cigarette excise tax, which is fairly low. These low rates on consumption taxes reflect a state that generates less revenue per capita than most. That is a function of income levels and economic reality, not long-sighted tax policy. Mississippi's per capita personal income is among the lowest in the nation, which means the tax base itself is smaller to begin with. A 4% rate on a lower base produces less revenue per person, which is why per capita collections are low despite rates that are still not competitive with states like Florida or Texas. To put that in perspective, on $500,000 of annual pass-through income, 4% produces $20,000 in state income tax. Meanwhile, in states like Florida and states like Texas, that figure is zero. Over 10 years, the math, as you can see, is fairly simple. The difference is $200,000 before accounting for the time value of money. Mississippi's permanent full expensing provision is a genuine advantage for capital intensive businesses, and it distinguishes the state from nearly every other state that imposes an income tax. But expensing only reduces taxable income. Wouldn't it be better not to have any tax to begin with? A business that takes full expensing and still generates net income above $10,000 pays 4% on that marginal income. Meanwhile, in Florida and Texas and a few other states, the rate on that income is zero, regardless of whether the business invested in equipment. Now, keep all of that in mind because redomestication is the lesser known legal process of transferring a company's legal state of domicile to a new state without dissolving it, without creating a new entity, and without triggering federal income tax, but only when performed with the requisite formalities under the Federal Internal Revenue Code, applicable Treasury regulations, and the statutory frameworks of both the destination and departing states. The company retains its existing federal employer identification number, contracts, credit history, and bank accounts when performed by a competent professional. Keyword there being competent. Foreign entity registration is not the same thing as redomestication because foreign entity registration, also referred to as foreign qualification, among other terms, does not change the company's domicile. In fact, it keeps the entity domiciled in Mississippi and merely adds a second state of compliance obligations indefinitely. Meanwhile, a traditional merger is also not the same thing as redomestication because a traditional merger creates a new entity in the destination state and can trigger serious tax consequences. Finally, dissolution terminates the company. Dissolution should not enter the conversation unless the company is truly going out of business and closing its doors. I like to tell prospective clients that dissolution is the legal equivalent of burning down your house to move to a new neighborhood. If you have a so-called professional suggesting dissolution as a mechanism of relocating your company, please seek better advice. Redomestication, when paired with a change of personal residency and a reduction or cessation of business activities in Mississippi, can reduce or even eliminate state tax exposure for that entity and its owners. Now, Mississippi, to be fair, has done more than most states. Full expensing is a genuine differentiator, but 4% is infinitely more than zero. The corporate tax is still graduated with a really horrible throwback rule, and the pension system is a dumpster fire because it is funded at only 57% of anticipated future obligations. The reforms are a step in the right direction, but the fiscal foundation underneath them is on shaky ground. Now is the time to act before the Mississippi legislature changes the law to hinder or even eliminate redomestication. If you have questions regarding potentially redomesticating your existing LLC or corporation out of Mississippi, please use the link in the description for more information on this process and to schedule time for you and I to speak one-on-one about your specific situation. Again, my name is Chad Cummings, and I hope that you found this information helpful. As always, the information in this presentation is general in nature and is not legal advice because that advice, by definition, must be specific to a particular set of facts and circumstances. Should you have any questions regarding this information or the content of any of my earlier presentations on these tantalizing topics, please visit my firm website at www.cummings.law, not .com, but .law to schedule time for a consultation. I look forward to the opportunity to speak with and perhaps even work with you very soon.